Linda, I know you bring some good holiday cheer for the new year. A couple reasons to be optimistic. Before we get to that, let's talk about the subject we just did. How much is trade on your radar at Federated?
Well, of course, trade has been on everyone's radar over the last probably 6 to 12 months. But I think I would probably agree with your last guess in the sense that we're probably not going to get an absolute resolution of the trade war between U.S. and China. However, could we get an off-ramp, a good photo op, shake hands, and agree to talk over the next couple of months? But I think more importantly for the markets is, are they going to postpone those January 1 tariffs to sometime, later on? And I think if that occurs, I think the markets will actually have the potential to move higher.
Okay, give us some reason. It's been a volatile couple of weeks and months. The Dow is basically flat for the year, so I guess that's the good news. But give us a reason to be optimistic as we head into 2019.
Sure. You're absolutely right. The markets have been volatile, and I would probably argue that it's much more fear-driven. If you look at the underlying economy, and we got a good glimpse of that, Cyber Monday and Thanksgiving sales, that the consumer is very strong and that they're 70% of U.S. economy. In addition, you have corporate profits going into 2019. We are expecting about 8 to 9% EPS growth, and that's on top of the 20-plus EPS growth that we had in 2018. So the corporate world, I think, is in pretty good shape as well. And lastly, I think valuations are much more reasonable today than they were probably 6 weeks ago. So putting those three together, in addition to looking at the underlying economic activity being, tame inflation, good unemployment, low unemployment, I think all of these things put together points to a reasonable economy.
Well, valuations are only more favorable if the denominator doesn't move that much. The P on the PE, that's moved down. Prices have come down. But if earnings also drop in a similar way, then the valuation stays the same. It obviously, you think, Linda, it sounds like you believe anyway, that earnings are going to hold up enough to keep those valuations tasty.
I think they will. I mean, expectations for 2019 is an additional 8 to 9% EPS growth. So I think, the revenue growth is also expected to be about 5%. If you continue to see a consumer that is spending and a corporate world that is incentivized to do capital expenditure, for example, in addition to do, shareholder-friendly activities like share buybacks, I think all of those things together will help, the economy moving forward and earnings growth to probably potentially even surprise to the upside. I think the issue here is the fear factor among investors, where we're expecting that, the Fed is not going to stop at all with the rate increases, and we're not going to get a resolution at all in China. And I think that fear factor is what's really causing market volatility and issues in the stock market.